Welcome back, ladies and gentlemen. We're going to be streaming in ultra low latency, so you guys get up to the second information. AMC fourth quarter and full year 2024 earnings webcast, starting here in about 20 minutes. Actually, 23 minutes to be exact. So for a few minutes, we're going to talk about Citadel Securities, Robinhood, and payment for order flow. Because to put it simply, Citadel Securities is costing retailers tons of money, and they're willing to pay billions of dollars to make their own. Because, of course, if something is free, well, then, of course, you are the product. So before we get started, let's say hello to Elon and Doge for a quick moment. Let's give everyone a chance to join.
Elon and Doge, we're kicking down the door, rolling to the SEC, time to settle the score. Elon in the game, breaking all the chains. Doge by his side, they don't play no games. Step into the SEC, watch them all sweat. We uncovering the fraud, ain't no secrets left. Naked shorts in the shadows, they've been creeping. Market manipulation, these crooks been sleeping. Retail's been trapped, but we bring in the fight. Musk and Doge on the rise, taking back the night. We hit the SEC, exposing the lies. We're rooting out corruption, watch them meet their demise. Free the markets, make them fair once again. Elon and Doge rolling deep for the win.
We did have a significant earnings beat today. AMC surprised earnings per share to the upside by 77%.
See the dirty tricks they try to pull. Shorting stocks, playing games like a fool. But we too sharp, we calling the bluff. Elon's got the plan, now the pressure's tough. Retail investors, time to get your share. No more rig markets, no more despair. Fraud's going down, we taking control. Elon and Doge breaking out of the mold. We in the SEC, exposing the lies. Rooting out corruption, watch them meet their demise. Free the markets, make them fair once again. Elon and Doge rolling deep for the win. We on a mission, bring the truth to light. No more naked shorts hiding out of sight. Retail power, we reclaiming the street. Musk and Doge bringing heat to Wall Street. SEC, exposing the lies. Rooting out corruption, watch them meet their demise. Free the markets, make them fair once again. Elon and Doge rolling deep for the win. Hey, we on a mission, bring the truth to light. No more naked shorts hiding out of sight. Retail power, we reclaiming the street. Musk and Doge bringing heat to Wall Street. Be the lion in the front, Doge holding it down. They can't stop us, we taking back the crown. Fraud's uncovered, justice in our sight. Markets are free, we restore the light. Elon in the front, Doge holding it down. They can't stop us, we taking back the crown. Fraud's uncovered, justice in our sight. Markets are free, we restore the light.
All right. Awesome song from AMC for everyone. Give him a shout on Twitter if you don't already follow the guy. It's my buddy Wooderson. You guys have seen him on the channel many times. Let's take a look here. Since we're still waiting, we got about 18 minutes before this starts. Nick, thank you very much, my friend. Welcome back. Lego, Hilsey, Diaz, Wolfie, all my friends and mods. Mods, you guys are going to have your hands full today. Please don't block or ban anyone unless they're saying really obscene things. I know it can be difficult sometimes with the way that some people act, but I'm just giving you guys a heads up. People are going to be heated, and that's all right. Most brokerages like Fidelity, Schwab, and E-Trade sell your stock market orders to market makers like Citadel so that they can profit and you lose. Why is this a big deal? Well, ladies and gentlemen, yesterday, 71% of all retail orders for AMC were processed in dark pools. 71%. What does that tell you? Dark pool manipulation is number one. Number one for these institutions to be able to prevent the stock price from going higher. Citadel pays over $1 billion a year for your orders. We saw just a few days ago, this article came out that said that large market makers are paying billions to access retail orders in stocks and options. Controversial practice banned in most countries outside the United States. Why do you think it's been banned in most countries, but not here? Maybe it's the same as many other things that have been banned in other countries, but not here. So Citadel paid $732 million for options order flow and $219 million for cash equity order flow. I mean, stocks and such. Between April and December of 2024. That's just in 9 months. And according to the regulatory filings of the largest 5 retail brokers in the U.S., that all use payment for order flow: Charles Schwab, Ameritrade, Fidelity, E-Trade, and Robinhood, the largest receivers of market maker payments, according to this filing, with IBKR, Interactive Brokers being one of the largest retail brokers, was not part of the survey, as they claim to not be taking part in payment for order flow. However, a lot of the IBKR orders are still routed through dark pools because they have something called internalization. And this internalization allows market makers to make money through the spreads. That's the difference between the purchase price and the sale price, something that you do not see, folks. The market makers process your orders in dark pools. They fail to deliver and give you artificially created fake shares that dilute a stock and crush its stock price. This is called synthetic share creation, and it is legal via Market Maker Exemption Rule 203B III. FTDs can be rolled almost indefinitely between multiple institutions. So we are still waiting, as you guys can see. We got the hold music going in the background there, but I have it paused. Otherwise, we will get shut down due to copyright infringement. Payment for stock order flows. Hey, welcome, Cat DeLuca. Sorry about that high volume. I'll turn that down a little bit there so you guys don't get blasted the next time somebody subscribes. Welcome to the channel, Cat. Payment for order flow increased, particularly almost doubling between April 2024, where it stood at $66 million, increasing to $116 in December 2024. That is only for equity orders, not for options orders, just so you guys know, aware of the discrepancy there. The payment for order flow was pioneered in the 1990s by the Ponzi king himself, Bernard Madoff. Yes, Bernie Madoff. The biggest recipient of payment for order flow from market makers was, of course, Robinhood, with $1.14 billion in options-related receipts and $262 million in receipt for stock flows. They were followed closely by Charles Schwab, who got $927 million for it towards stock-related flows, and $359 million compared to $568 million in options. E-Trade, owned by Morgan Stanley, received another $234 million for their stock order flows alone. This gives them the potential to front-run your trades, folks. That's how they can make so much money. And they can be purchased by both their market, the trades purchased by the market maker, and they can occur through both the market maker and their hedge fund subsidiary. You can see here on the law offices of Tamara Da Silva website, SEC sued Virtue Financial, one of the largest market makers in the world. And they did so because, according to the SEC, Virtue and its affiliated entities, their hedge fund, managed 2 distinct operations which they claimed were adequately isolated from one another. The first, an order execution service, also known as a market maker, which Virtue would handle and execute customer orders, generally in exchange for a commission, PFOF model, payment for order flow. The second was their proprietary trading operation, a hedge fund, where the firm engaged in buying and selling securities for its own profit. However, the SEC contends that Virtue Americas inadequately protected a database storing all post-trade details originating from customer orders processed and executed by the company. So it's very clear there exactly what's going on. And oh, I'm sorry, I was wrong. It wasn't 71%. I was wrong. I apologize to everybody. 78% of all AMC trades occurred off of the lit markets into the dark pools yesterday. I don't have the numbers for today yet because the day has barely ended and it takes a few minutes for that data to become available. So almost 80% of all AMC orders yesterday alone were processed in dark pools. Robinhood claims to be commission free, but the reality has shown that customers receive far worse trade prices. It's so bad, folks. It's so bad that Robinhood customers lost $34.1 million more than if they had just paid a few pennies or a couple bucks in upfront commissions. And this isn't coming from me. This is coming directly from the Securities Exchange Commission and FINRA, because Robinhood was fined $65 million, and they accepted it, of course, with a little slap on the wrist for misleading their stock market customers of how they make their revenue. The SEC fines comes one day after regulators in Massachusetts filed a lawsuit against Robinhood for targeting young, inexperienced investors with flashy gimmicks. Blah, blah, blah. The federal officials said that the company only partially explained on its outline page how it makes money, omitting details about its largest revenue source. Robinhood takes a user stock order and sells it to a larger trading firm that executes a trade known as payment for order flow. They made no mention of payment for order flow rates, regulators said, at a time when the company was rapidly growing. While Robinhood markets its services as commission-free, quote, commission-free because you are the product, the SEC claims that customers in reality received inferior trade prices that, in aggregate, deprived customers of $34.1 million, despite any savings that they received from paying zero commissions. So what this means in plain English is that even though your trades are commission-free, you lost $34 million more on top of the price of them being free. So if you had just paid a fraction of a dollar or a few pennies, whatever, maybe even a couple bucks for a massively large trade, Robinhood customers would have saved over $34 million in a short period of time, which is absolutely astounding to me. And it's not just Robinhood, as I told you guys. Schwab, Fidelity, Webull, E-Trade, all of these brokerages, almost every single one, is using payment for order flow in order to sell your orders to market makers that front run your trades. That's why you see here something called Lit Exchange. It's the future of stock and crypto trading, folks. Something that is going to utilize artificial intelligence and swarm intelligence to let you achieve a level of information that you've never been able to achieve before, in order, and also route your orders directly to lit markets. It's a big deal, because if your orders are routed to lit markets, the market makers can't give you fake shares. They can't give you synthetic shares. They can't front run your trades in the same way. The hedge fund can't front run your trade in the same way. They can't process your orders in the dark pools. What does this mean? They have less shares with which to fail to deliver. And with less orders going to them, they'll have less ability to manipulate a stock price. And this isn't just for AMC. This is for every stock. GameStop, Tesla, you name it. Every single stock has dark pool flow. But of course, meme stocks, ones that are processed majority in dark pools, are the ones that are manipulated the most. Yes, myopic third eye says Q4 revenue for AMC grew 18% year over year to $1.3 billion, with attendance rising 20% to 62.4 million. Net loss shrank from 182 to 135 million, even though full year revenue dropped 3.6% due to a writer's strike. Now, Robinhood is now fully transparent in their communication. They said, Robinhood is now fully transparent in our communications with customers about our current revenue streams, a spokesperson said in a statement. Therefore, it means it's legal for you to lose more money with Robinhood rather than just paying upfront commissions, saving more money and getting better price execution, because they now disclose it in their fine print. When you sign up to become a Robinhood user, you agree to this. Whether you know it or not, whether you read the fine print or not, you have agreed to this. In June of 2020, a Robinhood user from Illinois died by suicide after his account erroneously showed a negative $730,000 balance. In October, an undisclosed number of accounts were hacked, and users complained that they couldn't reach Robinhood customer service to get it fixed. In January of 2021, Robinhood removed retail's ability to buy GameStop, AMC, and a dozen other securities, including Silver ETF, SLV, during a massive short squeeze in which they had potential to make tons of money, literally tons and tons of money. And Robinhood, of course, allowed only institutions like short hedge funds and family offices to continue buying those stocks, while retail investors were forced into position close only status, meaning the only thing you could do was sell your shares, preventing you from buying more shares or call contracts on AMC so that the stock wouldn't go up. Same goes for GameStop and the dozen other securities, including SLV, the silver ETF. Hence why we talk about these beautiful coins in partnership between AMC and Highcroft Mining Corporation, stock ticker HYMC. Excuse my dog, one moment. Which I own quite a good number of, and I'm proud to say. But of course, I was wrong in saying that stocks like AMC was traded over 70% in total daily volume in dark pools, because it was in fact 78% of all AMC stock was traded in dark pools yesterday, with your order being sold to the highest bidding market maker. If you've had enough, feel free to sign up for litexchange.com. You can even own the company thanks to the Jobs Act of 2012, Regulation CF, known as Regulation Crowdfunding. This allows regular people like you don't have to be some rich prick, you don't have to be a hedge fund or a venture capital firm to invest in the company. This means you get to get in on the ground floor before the company's launch, before the company's IPO. Because when LitExchange goes public with an IPO as planned in the next couple of years, you would then be able to sell your shares of stock on the market using your LitExchange brokerage account or any other brokerage if you wanted to. You can find out more on the FINRA regulated funding portal, Silicon Prairie here. And so far, over 300 retail investors have invested over $500,000 in the company. And even Silicon Prairie's CEO, David Ducini, agrees that this offering demonstrates the better practices of building a community of stakeholders prior to launching an offering, people that actually understand what's going on in financial markets. So that being said, if you're sick of 78% of all AMC trades going off market, same thing with GameStop, same thing with companies like Tesla and many of those, SLV, PSLV, GLD, you got the idea, right? You should consider signing up for LitExchange. You don't have to invest money in the company, of course. You can do that if you feel like it. All you have to do is input your email address there, click subscribe, and we will send you information on the company as we approach launch. I will give you this information now. Before our press release later this week, LitExchange is planning to launch beta in Q4 of this year. And we expect and hope for and are planning for a full launch in Q1 of 2026, pending any regulatory requirements or delays, right? Because of course there can be a delay, but we are well prepared with that, with a fantastic team of securities attorneys. But again, there's the proof in the pudding from Citadel Securities, paying over $943 million in less than 9 months of 2024 for your payment for order flow. Robinhood Financial was fined $65 million by the SEC for misleading users and costing you more than $34 million than if you had just paid a commission in the first place. Now let's talk AMC. We got a couple of minutes here. We still got 5 minutes before AMC kicks up this earnings call. As you can see here, we are streaming in ultra low latency so that you get this information the moment that it appears and that we all hear it together at the same time. Total revenues were $1.3 million for the quarter compared to $1.1 million for the quarter the year prior. Net loss was reduced to $135 million compared to $182 million for the prior year. Adjusted EBITDA increased to $164.8 million compared to $47.9 million for the prior year. Net cash provided by, which means used in operating activities, was $203 million, up from negative $77 million for the prior year. Another fantastic increase. Free cash flow was positive $113.9 million compared to negative $149 million the prior year. That we're talking about quarter over quarter, 2024 versus 2023 results. And cash equivalents in December 31st, 2024 was $632 million in cash and cash equivalents. Even their net loss increased to only $134 million compared to $182 million for the quarter over quarter the prior year. Total revenues were $4.6 billion, $4.63 billion compared to $4.81 billion the prior year. So total revenues were down slightly year over year, and that is likely due to the writer's strike. I'm going to change the color of this one so that you folks can see that that was a negative there. Let's change the color of that one to something different. Let me get rid of it entirely, and we will continue. We still got about 2 minutes before the actual call launches. I will delete that one entirely. There we go. And I will mark it with a different color so you can see that it was a negative. Their net loss was better. Their net loss decreased from 396 million for 2023 to only 352 million in 2024. See if we can change the color of that one as well. Actually, I'll do all the negative ones first. Should make things easier because there's not many negatives. There's more positives. So I'll do all the positive ones first. The adjusted EBITDA did decrease for 2024 versus 2023 from 343.9 million compared to 454.3 million for 2023. Again, one can likely say that that is due to the writer's strike, meaning there was fewer films. Net cash increased, so I will not highlight that. And free cash flow also increased, so I will not highlight that color either. So the vast majority of things were here for the positive. As you can see, let me adjust this one. Change the color here. For some reason, things kind of tweaking out on me a little bit. There we go. Now I'll mark the bottom two as positives as I read them aloud. Got about 2 minutes, about 1 minute still before this starts up. So everything in like yellow, light or dark yellow, is a positive for AMC earnings, an increase. And anything in green is a negative. So as you can see, we have two negatives here. Net cash used in operating activities was 50 million compared to negative 50 million compared to negative 215 million for the year prior. Free cash flow was negative 296 million compared to negative 440 million for the year prior. More than 62 million guests visited AMC in the fourth quarter, marking a post-pandemic fourth quarter record and a healthy 20% increase compared to the year prior. And we also saw food and beverage revenue per patron at an all-time fourth quarter record for AMC, $7.15. Fantastic to see. So right here, what I'm seeing on the business fundamentals is a greatly increasing business, increasing EBITDA, increasing profitability, increasing revenues quarter over quarter from the year prior, even though the revenues for the entire year were lower because in Q2, I believe, of 2024, there was a writer's strike. So that did, Q1. So that did hurt the first quarter of 2024 for AMC. But overall, things are looking very good. AMC spending a lot of money to upgrade their movie theaters, which is very bullish in my opinion. Because if you have a company like this that was near bankruptcy because AMC purchased in 2019 another movie theater, I think it was not Cineworld, I think it was Regal. They purchased Odeon Regal in 2019. And then, of course, in 2020, there was an unexpected and unforeseen shutdown of basically everything, right? You guys know why. The scam-demic that occurred in 2020. Short sellers got greedy. They started shorting companies like GameStop and AMC, got screwed over royally, and are still yet to close their short positions on many of these companies. Even though the short interest has reduced on some of these companies, the fact is that short interest is self-reported, and these companies can use things like married and divorced calls and puts, and is the contracts, swaps, futures, and so on in order to hide their short interest, because swaps do not reflect actual short interest. Okay, I am still listening to that music, just so you know. It has not yet started. All right, folks. Yes, Luke Moonwalker says, use IEX. That's a great idea, my friend, if you can. The problem is that many people can't because most brokerages don't allow you to manually route your trades, and the ones that do make it extremely difficult for you to route your trades. Have you guys ever tried doing it on Fidelity? It's a fucking nightmare. Pardon my French. But it's a nightmare for a reason because they don't want you routing your trades. They make it incredibly hard. So let LitExchange do that for you when it launches by signing up. And again, you can't even own a part of the company. You can even become an equity share owner of LitExchange via the Regulation CF exemption through the Jobs Act of 2012. This is the first time in history of the world that an upcoming stock and crypto broker has ever given you or any retail investor that's not rich the opportunity to own that company before its launch and IPO. Bilbo. Yes, there have been murmurs about possible mergers or acquisitions with another profitable movie theater chain called Cineworld. Cineworld. Okay, it's not Cinemark. It's not Regal. It's called Cineworld, if I recall. And they are looking at a potential IPO and merger with other companies. They could merge with Cinemark. They could merge with AMC. They are a profitable company. They are a smaller movie theater company, but they are looking at a potential IPO or merger. Here we go. We have started.
Forward-looking statements, whether as a result of new information or future events. On this webcast, we may reference non-GAAP financial measures such as adjusted EBITDA, constant currency, and free cash flow, among others. For a full reconciliation of our non-GAAP measures to GAAP results, please see our earnings release posted in the Investor Relations section of our website earlier today. After our prepared remarks, there will be a question and answer session. This afternoon's webcast is being recorded, and a replay will be available in the Investor Relations section of our website at amctheaters.com later today. With that, I'll turn the call over to Adam.
Thank you, John. Good afternoon, everybody, and thank you for joining us today. What a superb quarter AMC just completed, especially so in November and December of 2024, thanks to hit movies like Gladiator 2, Wicked, and Moana 2, which pushed Thanksgiving patronage at AMC across the United States to the highest AMC has ever seen in our 105-year history. And Mufasa the Lion King, along with numerous other titles, gave us results in December that were just stellar as well. AMC revenue in the fourth quarter was up 18% year over year, and our adjusted EBITDA of $164.8 million was more than triple. May I say that again? Our adjusted EBITDA was more than triple the adjusted EBITDA that was reported for the fourth quarter a year ago. We handily beat consensus estimates for both revenue and for adjusted EBITDA in the fourth quarter of 2024. Importantly, AMC generated more than $200 million of cash from operating activities and $114 million in free cash flow in the fourth quarter. It was our highest quarterly cash flow post-pandemic. These results underscore the continued progress that AMC has been making as we continue on a road to recovery, buttressed by a growing lineup of consumer-appealing movies opening exclusively in movie theaters. More than 62 million guests visited an AMC theater worldwide, AMC here in the United States, Odeon in Europe, and our operations in the Middle East, in the fourth quarter of 2024, marking a post-pandemic fourth quarter record for us and an impressive 20% increase in attendance compared to the fourth quarter of 2023. Complementing this fourth quarter attendance milestone, moviegoers enthusiastically embraced the variety and quality of our food and beverage offerings, driving food and beverage revenue per patron to $7.15, an all-time fourth quarter record for AMC ever. All those quarter-over-quarter improvements are especially noteworthy given AMC's incredibly high market share and the resulting strong financial performance that AMC enjoyed in last year's fourth quarter, specifically due to our distributing Taylor Swift's The Eras Tour movie and Beyoncé's Renaissance film in October, November, and December of 2023 to great acclaim. Looking at the full year of 2024, AMC welcomed some 224 million moviegoers to our theaters across the globe. And those moviegoers gravitated toward our premium experiences, to our largest screens, our best projection technologies, our most immersive sound systems, and our luxurious seating. Accordingly, we are pleased to report to you that for full year 2024, AMC achieved all-time per-patron result records on several key metrics: an all-time record for admissions revenue per patron, an all-time record for food and beverage revenue per patron, and an all-time record for total revenue per patron. Another crucial accomplishment during 2024 was AMC's continued successful strengthening of our balance sheet. Sean will provide more details in just a few minutes, but suffice it to say that our balance sheet is meaningfully stronger today as a result of the significant actions that AMC took during the year to reduce our debt, to lengthen our debt maturities, and to bolster our cash reserves. 2024 was truly a year of two halves. The first half was heavily impacted by Hollywood's long strikes of 2023, followed by a resurgent second half driven by an increase in new releases and an overall stronger film slate. The domestic industry box office, which is kind of the basic measure of the size of our industry, which was only $3.6 billion for the first 6 months of 2024, soared to $5.1 billion in the second 6 months of 2024. Much, much stronger than the first half by orders of magnitude. The second half turnaround was certainly eventful, with a number of long-standing box office records being shattered. Notably, in the second half, the movie industry saw the highest grossing animated film in history. It saw the most successful R-rated film of all time. It saw the highest grossing musical film adaptation of a Broadway musical of all time. And as I said earlier, we at AMC enjoyed the biggest Thanksgiving weekend box office ever. Looking at all the progress made in the latter half of 2024, it seems to us that it's clear that our industry finally is getting healthier. We're still not where we want to be. We're still not where we need to ultimately be. But real progress has been and is being made. And looking to 2025, the current year that started less than 60 days ago, at AMC we are highly optimistic that the box office for this new current year will feel much more in line with that of the robust revenues of the second half of 2024 as compared to the anemic revenues of the first half of 2024.
Oh, that's fantastic.
Early projections indicate that the number of wide-release films in 2025 could increase by approximately 17% compared to the number of wide-release films of 2024, representing yet another significant step toward ultimately getting to pre-pandemic output levels and another cause for our optimism that the box office will materially rise in 2025. During this current new year, we anticipate the box office will strengthen with each successive quarter. Historically, Q1 has been the quietest period of the year, and this year is likely to be no exception to that long-standing trend, driven by seasonal consumer behavior and studio release patterns. But following Q1, we believe the box office is set to heat up, with Q2 poised to significantly outpace the first 3 months of this year. As we transition into the heart of the big summer movie season, Q3 looks to be a vibrant summer for moviegoing and, importantly to us, for AMC. And then we hope to close out 2025 big, with a wave of highly anticipated franchise sequels, including the second part of Universal's highly successful Wicked, Disney's Zootopia 2, and what can you say about this film, the next installment of James Cameron's mind-bogglingly successful epic saga, Avatar. With the potential for each quarter in 2025 to build upon the last, we currently estimate that 2025 domestic industry box office could see a $500 million to $1 billion growth compared to 2024. And remember that given AMC's historic market share levels, about 2/9 of any heightened box office should flow straight in the direction of AMC Entertainment. With that as a preamble, and I'm going to come back a little bit more to talk about some initiatives now underway at the company and some thoughts on our recent performance in the markets, let me turn the call over to our Chief Financial Officer, Sean Goodman. Sean?
Thanks, Adam.
I know my
Thanks,
voice is muted
everyone,
on
for
purpose.
joining us this afternoon. Indeed, the fourth quarter once again did prove that moviegoing demand is robust when compelling content is available on the big screens. During the quarter, we welcomed 62.4 million guests to our theaters around the world. This is a post-pandemic fourth quarter record that exceeded the prior year by some 20%. And not only did we achieve an attendance record, we also achieved all-time fourth quarter record food and beverage revenue per patron of $7.15 and our second highest fourth quarter admissions revenue per patron of $11.56. As a result of this, we registered fourth quarter post-pandemic records for both total admissions and total food and beverage revenue, and our overall revenue grew 18.3% compared to the fourth quarter of 2023 to hit a post-pandemic fourth quarter record of $1.3 billion. Our results show that the continued focus on enhancing the guest experience, growing profit per patron, and overall operating efficiency are indeed yielding results. Our revenue per patron is now approximately 34% higher than it was in pre-pandemic 2019. This is driven primarily by growth in food and beverage revenue per patron of 51%. The success in food and beverage revenue per patron is a result of our market-leading initiatives, including collectible movie-themed merchandise, specialty cocktails, menu enhancements, and mobile ordering technology. When comparing our results to the fourth quarter of 2023, it's important to note that comparisons may not really provide the full picture. This is because you may recall that in the fourth quarter of 2023, AMC distributed the highly successful concert movies Taylor Swift, The Eras Tour, and Renaissance, a film by Beyoncé. These concert movies had special event ticket pricing and generated higher than usual food and beverage revenue per patron associated with high demand collectible concession items. So, while the fourth quarter admissions revenue per patron declined by approximately 2.4% compared to Q4 2023, when we normalize for the impact of the concert movies, admissions revenue per patron actually increased by 3.2%. Likewise, food and beverage revenue per patron appears to be only slightly ahead of the fourth quarter of 2023. However, when we normalize for the impact of the concert movies, food and beverage revenue per patron saw an increase of approximately 2.8%. And while we are discussing the impact of last year's concert movie events, we should note that AMC recorded domestic market shares in excess of 35% for these two movies in 2023, and this makes market share comparisons somewhat difficult. Now, when you couple our fourth quarter 2024 revenue records with our focus on efficiently delivering the best possible guest experience, adjusted EBITDA increases from $47.9 million in the fourth quarter of 2023 to $164.8 million this year. That's an increase of more than 240%. And these results were achieved in both the domestic business, where adjusted EBITDA more than tripled to $123 million, and the international business, where adjusted EBITDA increased more than fourfold to $41.8 million. These results are a clear indication of the operating leverage inherent in our business. Revenue increased by 18.3%. This led to an adjusted EBITDA increase of 244%. This operating leverage is another reason to be optimistic about AMC's future as our industry continues along a recovery trajectory. Okay, let's now move to a discussion about cash flow and the balance sheet. A highlight of this quarter is cash flow. We generated $203.6 million of cash from operating activities and $113.9 million in free cash flow. These are our very best cash flow numbers since the fourth quarter of 2019. And we ended the quarter with cash and cash equivalents of $632.3 million. It is worth noting that historically we generate cash from working capital during the second and fourth quarters, and we tend to use cash from working capital during the first and third quarters. This pattern will, of course, depend on the timing of film releases and the pattern of audience attendance during holiday periods. But during the fourth quarter, we benefited from strong cash generated from working capital that we expect will largely reverse in the first quarter of 2025, when many payments related to the successful fourth quarter are made. Talking about cash flow, CapEx net of landlord contributions was $83.9 million in the fourth quarter, and this brings the total net CapEx spend to $213.7 million for the full year 2024. We expect CapEx in 2025 to be in the range of $175 to $225 million. From a theater footprint perspective, during the fourth quarter, we added another one new high-performing theater, and we permanently closed 3 underperforming locations. So this brings the total number of locations permanently closed since the pandemic began to 192, and the total new locations opened to 62. So this represents a net reduction of 130 locations, or approximately 13% of our locations at December 31, 2019. And we continue to see that the 62 new locations very significantly outperform the 192 closed locations. Going forward, as we review and rationalize the theater portfolio at every opportunity, we'll continue to invest in our circuit to enhance the guest experience. Note that the deferred rent balance at the end of 2024 was approximately $37.6 million, and we plan to reduce this balance by another approximately $8 million during 2025. From a capital markets perspective, we were once again active during Q4, continuing to strengthen our balance sheet to position the company for sustainable long-term success. During the course of 2024, we have reduced the principal balance of our debt and finance leases by $375.9 million. We have extended the maturity of approximately $2.4 billion of debt that was due in 2026 to 2029 and beyond. We've raised approximately $262 million of gross proceeds from the sale of our Class A common stock. And in addition, last month, January, we received $171.7 million as initial cash proceeds associated with the establishment of forward positions for 30 million shares of our common stock, plus at-the-market offerings of 17.1 million shares. Strengthening the balance sheet is a priority, and since the beginning of 2022, we have lowered the principal value of our debt and finance leases by more than $1 billion, and we've also repaid $277.5 million of deferred leases. This brings the total debt that we've reduced over the period to $1.34 billion. These actions have been made possible by our ability to raise equity capital, which has been essential to our survival and has undeniably strengthened our balance sheet and positioned the company to capitalize on future growth opportunities as the film exhibition industry recovers. The outlook for the industry box office in 2025 and 2026 appears to be increasingly promising, and we are confident that the strategic and operational actions that we have taken and will continue to take position us very well for the future. And now I'll hand the webcast back over to Adam.
Thank you, Sean. On our last quarter's call, we introduced the notion that after 4 grueling post-pandemic years, it was finally time for AMC to get off our heels defensively and instead to play on offense once again. So on this call, I want to give you an update of the activity already underway for AMC to go on offense.
That's what I'm talking about. Let's go.
AMC's Go Plan, GO, Go on Offense, set in motion a series of initiatives designed to leverage our strengths and accelerate our recovery. Aligning with our expectations for a rising and more consistent box office over the next several years to come, it makes sense to try to grow your revenues when revenues are in fact growing. With a central theme of improving the guest experience inside our theaters, the AMC Go Plan is multidimensional and designed to drive additional profitable attendance to our theaters, to AMC in the U.S. and Odeon abroad. With our industry-leading per-patron metrics, which, as you know, hit record levels in 2024, what's so important about this drive to increase and bolster our attendance is that every incremental guest in our theaters is not only valued, but it drives a huge percentage of their incremental revenue down to the EBITDA line. As more capital becomes available to AMC to invest in growth initiatives, one key aspect of the AMC Go Plan is to add more premium experiences. Capitalizing on the fact that AMC today is already, without question, the global leader in offering premium large format screens. I can say to you today that in calendar year 2025, and again in calendar year 2026, we currently expect to upgrade more of our IMAX auditoriums to the very popular IMAX with Laser. We intend to add more Dolby Cinema screens. We intend to add more Prime at AMC screens, our so-called house brand PLF format. We also intend to bring our successful XL, or extra large screen concept that was launched in Europe last year to the United States. We would hope to introduce between 50 and 100 XL screens in the United States this year and add another 150 XL screens in addition in 2026. Our rollout of Laser at AMC screens with their brighter and sharper picture on the screen resulting from laser projection continues apace. It has already been installed in about 1/3 of our U.S. screens, and we will be adding a great number more of laser projections to AMC theaters, both in 25 and in 2026. Another part of the AMC Go Plan is to improve the seating comfort and appeal at more of our theaters, especially at ones that are already quite profitable and well attended. Recent luxurious seat replacements at AMC Burbank 16 in Los Angeles, along with AMC Lincoln Square 13 and AMC Empire 25 in Manhattan have led to dramatically improved guest satisfaction scores and, importantly for us, high theater gross seats. In fact, just a couple of weeks ago, on a Saturday night, out of the 550th theaters in the entire United States under the AMC brand, our three highest grossing theaters were Burbank, Lincoln Square, and Empire, the very three theaters where we installed this new luxurious leathery seat that's wider, that has more padding, that rocks, and in many cases has more legroom. Knowing that this has been a successful initiative to date, we've already identified several handfuls of important theaters that are profitable and well attended, that should produce even higher financial returns for AMC if we can introduce this new seat type in those locations. We aim to deploy here, again, as soon as growth capital becomes available to us such that we can invest to upgrade these theaters. Additionally, with respect to AMC's Go plan, it also includes our focusing on several exciting new innovations in our loyalty, subscription, and other marketing programs. To that end, on January 1, just several weeks ago, AMC launched our fourth and newest AMC Stubs loyalty program tier called Premier Go. It offers heightened program benefits, it's free, and this loyalty tier is designed specifically to incentivize our current AMC Stubs Insider tier members, who also enjoy free memberships, to patronize AMC more, to buy more movie tickets in our theaters and buy more food and beverage at our theaters. Premier Go status is earned when a consumer sees at least 8 movies at AMC in a year or earns at least 5,000 AMC Stubs points in a calendar year. We started on January 1st, 2025, with more than 300,000 moviegoers already enrolled in the Premier Go tier as members because we based their membership on their purchase history with AMC last year in 2024. We have also announced that we will be enhancing other benefits for our AMC Stubs members, especially those in our A-List program. In this case, we intend to give more value to our most avid moviegoers who average somewhere between 24 and 32 visits per year at AMC theaters in the United States. How are we improving A-List? First, we have increased the weekly movie limit for A-List members. They can now watch up to 4 movies per week, up from the current 3, when the new A-List innovations take effect on May 7th. Second, to encourage more family moviegoing, we will be lowering the minimum age to sign up for A-List from the current 16 to 13. Why did we pick 16 previously? Because to prevent fraud, we needed a state-issued ID, which takes us to the third improvement to A-List. To make A-List membership verification easier and faster at our theaters, A-Listers, beginning May 7, will be able to upload their own photos to their AMC Stubs profile and use this in-app photo of themselves, the members, in lieu of having to show a state-issued ID. That's true with children as well as adults, so we can lower the age to 13, and we think more parents are going to cause more of their children to sign up in the program. In addition, on A-List, we have already announced that in May, we will launch a wholly new AMC A-List Classic program, a subscription program that provides for the watching of 1 movie a week, not 4 movies a week or 3, but 1 movie a week, and not good at all of our theaters, only at our AMC Classic theaters. But in doing so with these limitations, we have the opportunity to offer this AMC Classic tier at a significantly reduced monthly subscription price. A-List continues to be one of the most successful programs that AMC has ever introduced, and we think it will get better still with these changes coming soon. We have much more in store for our movie-going guests in the guise of more marketing programs designed to stimulate attendance, but we're not ready to announce them yet today. So look for more important marketing initiative announcements coming from AMC to be publicly announced in the coming months. For all the talk about pursuing growth initiatives, because in so doing we can drive increased financial returns and boost the value of the company for the benefit of our shareholders, I think it's imperative that I add that it is also of paramount importance to AMC, and nothing has changed, that continuing to focus on strengthening the balance sheet, to reduce our debt, to lengthen maturities, to keep our cash reserves robust, remains an extremely important objective for this company. The fact that we strengthened our balance sheet over the past several years is why we are still here, and we will not take our eye off the ball. At the same time, we also believe there's enormous opportunity to grow our EBITDA, to improve our financial returns, to benefit our shareholders if and as when we have access to more growth capital. That pretty much concludes the comments about the fourth quarter and some of the activity underway at the company. But before I close this call and move to questions, I'd like to close with just a special message to our retail shareholders, many of whom, thousands of whom, will be listening to this webcast. I want you to know that what I've said to you for years now remains true. Every day I continue to actively read your social media commentary, as it gives me a great sense of your views and lets me read the room, so to speak. Sadly, there's so much false information floating around AMC on social media. Similarly, there are crackpot conspiracy theorists, like one after another, that seem to delight in speaking foolishly about AMC. So, from the horse's mouth, here's some straight talk. Please know that I am acutely aware of AMC's share price decline over the past 3 years, and I am acutely aware of the pain that is caused for many of you. I am, after all, myself, I believe, the largest single individual AMC shareholder. I've been increasing my share position since 2021. And I am, after all, or was it January 22? Was it? What was my last sale? I forgot. January 21? Or January 22. I think so, yeah. It's 3 years ago, right? Yeah, 3 years ago. I haven't sold a share in 3 years. Instead, I've increased my share position. And therefore, a share price decline that hurts you hurts me too. My interests are completely and directly aligned with yours. They are not aligned with anyone else other than you, and that is exactly as it should be. So think about all that I'm seeing, what you write and say. Here are two key thoughts. First, do not allow yourself to be distracted. Our biggest problem is not various market practices that some of you seem to detest. Instead, quite simply, it's that the movie industry and the movie theater industry has been in crisis for more than 4 long years. Domestic industry-wide movie theater attendance, believe it or not, is still down almost 40% from full year 2019 levels. That is a fact. And the fact that attendance is down means our ticket revenues will be stressed. the fact that attendance is down means that we will be able to sell food and drink and merchandise to fewer people. That is the problem at AMC. But I tell you that not as a bearer of bad news, but as a harbinger of good news to come. Because fortunately, as we have implemented one new idea after another, and as we have made our company more efficient over the past several years, AMC's profit per patron numbers are way, way up. We often see our profit per patron being as much as 50% higher than it was in pre-pandemic levels. So what that means is that for success, AMC does need the box office to be higher than it was in 2024, but we really do not need it to climb all the way back up to 2019 levels. And even more fortunately than that, the box office finally looks to be growing significantly and materially again. We are absolutely convinced, based on our expertise and our knowledge of what's coming, that the box office, industry-wide box office in 2025 will be bigger than 2024, and that the box office in 2026 will be bigger than that of 2025. But of course, no one has a perfect crystal ball. That's our view, that's our belief as of today. Only time will tell. The second thought I wanted to share is that some of you rail about the dilution of our stock, or with the perfect hindsight that comes from being able to Monday morning quarterback, the timing of the sale of our stock. Please know that we have only raised capital if the company truly and absolutely needed that cash to be in the drawer. Remember that many of our competitors, both big ones and small ones, both the most important ones and the most unimportant ones, so many movie theater chains have been forced into bankruptcy in the last 4 years because they ran out of cash. Not AMC. I repeat, not AMC. We stayed strong. We stayed alive. We stayed healthy. We stayed on a path towards recovery because of the actions that we took to bring cash in the door. Having said that, though, here is a pledge that I am making to you today. There will be no more cash raised from the sale of common stock in calendar year 2025 unless we first take that matter of authorizing more common shares to you, our shareholders, for you to vote and help us make such a decision. In summary, the entire team at AMC is absolutely committed to do all that we can to grow our revenues and to grow our adjusted EBITDA. We are constantly striving to enhance the value of our business, which after all is your company. AMC is the acknowledged leader of this industry. We have kept AMC alive and relatively strong in very troubled times, and we will continue to do everything humanly possible to keep AMC moving forward. And to that end, we just delivered one hell of a fourth quarter of 2024. Sean, let's move to questions both from our securities analysts and from our retail shareholders.
Thank you. We'll now be conducting a question and answer session. If you'd like to be placed in the question queue, please press star one on your telephone keypad. One moment, please, while we poll for questions. It's star one to be placed into question queue. Our first question is coming from Chad Boynan from Macquarie. Your line is now live.
On for Chad. Thanks for taking our question. So on the AMC Go plan, if the number of wide release films and the box office growth materializes as you expect is that when CapEx will rise to the 375 million or so annual level implied by the high end of the CapEx range? Or, is there anything else you can share in terms of further visibility for the magnitude or cadence of the CapEx deployment? Thank you.
Sure, I'm happy to respond, Chad. Our CapEx budget is going to stay around $200 million, plus or minus a little change, until such time as we have access to growth capital. And how we have access to growth capital is something that we are sorting through right now. There are a number of really creative ideas in place inside the company where we might be able to get third parties to finance some of our growth. There are other opportunities that are so obvious. The returns on some of these growth initiatives is so high that we'd love to be able to convince people to trust us with more growth capital. But until we have access to growth capital, we're going to keep CapEx tightly constrained. The time will come when we can grow it, but you'll know it way in advance. We will flag it in advance. We're not going to surprise you with big CapEx expenditures without having told you prior to doing so.
Understood. Appreciate that. As a quick follow-up, IMAX recently announced a deal for the movie Narnia to have an exclusive theatrical run, and I think this is a film that otherwise would have gone direct to streaming. So just curious to hear your thoughts and your views on the potential for more deals like this to come through and how you see the dynamic between streaming and theaters evolving from here. Thanks.
So there are streamers and then there are streamers. There are some streamers who have actively embraced theatrical releases.
Wow.
Apple and Amazon come to mind. And we've had superb meetings and conversations with both Apple and Amazon. We're highly encouraged, for example, that Amazon, which is a combination of Amazon and the old MGM, announced just a week or two ago that they were staffing up and boosting their distribution personnel with significant numbers because they would like to dramatically increase the number of films that Amazon is releasing. Doubling, even potentially tripling. We're not quite tripling, but more than doubling the potential releases coming out of the Amazon sphere. Similarly, Apple is so excited about the movie F1, which is coming out in June, which they're hopeful and we're hopeful is going to be a major blockbuster, gangbuster hit. It's directed by Joe Kosinski, the director of Top Gun Maverick. I believe it stars Brad Pitt. Apple is behind it completely, being distributed in the U.S. by Warner Brothers, is behind it completely. AMC is behind it completely. So the notion that some of these streaming services might actually embrace theatrical releases is something that's quite exciting to us. I think that as the industry experimented with all sorts of different release patterns post-COVID, a general consensus has emerged in Hollywood, not by all, but by most, that the most successful movies on streaming platforms are those that go to theaters first. And those movies that have a great theatrical release often wind up being the most watched movies on streaming services. Not all. You notice that there is another major streaming service that I talked about, that I did not talk about yet, that is not as enthusiastically embracing theaters, that being Netflix. But we continue to reach out to Netflix. And right now, Narnia is scheduled to play on AMC's IMAX screens. We would love to be able to convince Netflix that they're embracing theatrical releases is good for them. They did it with Glass Onion. They are doing it with Narnia. We'll see where this goes. Narnia is still 2 years away. But having said all that, I have always believed that the world of the consumer's appetite for entertainment and amusement is so voracious that it can support both a robust theatrical industry and a robust streaming industry side by side.
That's perfect. Thanks, Adam, and congrats on a great quarter.
Thank you. I'll turn the call over to management for retail investor questions at this time.
Thank you. So
Time for retail
questions
questions.
that we have is about our merchandise and movie-themed collectible items and how that is going, and if we can give the investors an update on that.
Thank you, Sean. One of the things I said in my prepared remarks was that AMC has been implementing one new idea after another. And not all ideas work, but a lot of them have. And one of them that clearly has worked and worked unbelievably well is movie-themed merchandise. 3 years ago, and it's working, by the way, not only in the United States, but also in Europe. 3 years ago, we didn't sell any movie-themed merchandise in our theaters. None. In calendar year 2024, we sold about $65 million of movie-themed merchandise from nothing 3 years earlier. And the profit margin on this movie-themed merchandise, not exactly, but it's in the neighborhood of 50%. These are good margins, as they were great margins as they were if you were in Shark Tank. These are really good margins, and we're selling a lot of merchandise. And one of my goals for 2025 is to see what we can't do to significantly increase our merchandise sales for the fourth year in a row. And it should actually be easier to accomplish than it may sound, because number one, we've been increasing the number of movies that we do this movie-themed merchandise for. It started out that we were only doing a handful of these a year, and now seemingly every couple of weeks we have a new movie-themed product coming out. But people didn't want to get stuck with excess inventory. So, especially in the early phase of this merchandise ordering, you got to buy the merchandise from where it's manufactured like 9 months before the movie comes out. So we would place orders for merchandise and then have to get it to hundreds and hundreds of retail locations around the country. And there was no ability to increase the supply of fast-selling items. Whatever you ordered 9 months before, once it sold out, you were sold out. We were finding ourselves in 2024 often selling out on Friday or Saturday of opening weekend of everything that we'd ordered for a movie. And when I say everything, I don't mean small quantities. I mean quantities in the hundreds of thousands of items. And so one of the things that we've decided to do for 25 is to increase the quantity of the merchandise that we order in advance so that we have more supply in our theaters, so that we don't sell out on Friday or Saturday, that maybe we have supply through Sunday, or maybe we have supply through the second weekend. But I do believe that our ability to continue to drive our merchandise business is one where we ought to be able to succeed handily.
And talking about
before I go on this one, and your question was about movie-themed merchandising, but talking about movie themes, we also have movie-themed drinks now in our bars. And just like we have more, and we used to have a few a year, but just like we have more and more movie-themed merchandise in our theaters, we now have more and more movie-themed drinks. And often they're our most successful item at the bar. And so we're also looking at ways, including new beverage pouring technologies, where we can increase the number of movie-themed drinks that we have available, because people clearly are buying them. And remember how important food and beverage numbers are to us. Our food and beverage numbers for the fourth quarter were the highest they've ever been in AMC's 105-year history. So this notion of being creative and imaginative and innovative in what we sell to our guests at our theaters is of crucial importance because it drives increased profitability.
And talking about food and ancillary revenue, there's a question about popcorn. And our retail popcorn.
So I've got to say, I'm so proud of what we've done in taking what's called AMC Perfectly Popcorn into the home. This started only not even 2 years ago, 22 months ago, I believe, when we launched AMC Perfectly Popcorn at 2,600, I think, close to it, plus or minus 100 Walmart locations in the United States for our ready-to-eat popcorn, and about 500 Walmart locations for our microwavable popcorn. Believe it or not, as a movie theater company, we have chefs, both for our dine-in theaters and even for our concession stands. And our chefs worked extremely hard and almost for a year developing the recipe for the home popcorn line so that it would taste like theatrical popcorn that you get in our theaters if you made it yourself at home or ate it yourself at home. And they succeeded. Fast forward 24 months. In calendar year 2024, our popcorn sales doubled compared to 2023. What's more, the distribution of our store counts greatly increased. In 2024, we added Kroger and Publix and Meijer. For 2025, we've added what's called Associated Grocers, which wholesales food product to regional and local markets and smaller chains around the country. As a result of all that, our home popcorn line, which launched in round numbers, 2,500 stores just 2 years ago, by the end of next month, will be in 11,000 retail stores in the United States. And I'm especially pleased. Walmart is such an important player in the grocery space. And I'm just so pleased that Walmart informed us a couple of months back that they were going to more than quintuple the number of Walmart stores carrying our microwavable popcorn line. So I think we went from 500 Walmart stores carrying the microwavable line to 2,700 by the end of April. This is all quite encouraging. It's very hard to launch a consumer product in the United States and do so profitably. And I believe where we are now is cumulatively, our Perfectly Popcorn line cumulatively is profitable and currently profitable. And we are highly confident that it will continue to grow in sales as we go forward. We've already established we're one of the best sellers in the popcorn category. And by the way, we just launched a new flavor, cinnamon butter, for those of you who like it slightly sweet. Anyway, I think popcorn's been a smashing success and more to come.
Question about our studio partners and windows. Do you see any opportunities to negotiate longer windows for our theatrical movie releases, and how might that impact the business?
I sure hope that we can introduce longer windows, because I think that the current industry experiment on windows has failed. Just a little history for those of you who don't know. Prior to COVID, in the United States, it varies by country outside the United States, but in the United States, movies typically did not get to the home until 74 days after initial theatrical release. The industry then COVID came and everybody experimented with all sorts of everything. Movies were going to the home the same day they were being taken to theaters. They were being taken at all sorts of different dates. Big movies, maybe a little slower, but not so big movies going to the home faster. The end result of all of that, and it's not all because of windows, but if you look at our industry's attendance across the entirety of the industry, it's still 40% below pre-pandemic levels, not quite 40%. The last number I saw was 38%. It's still almost 40% below pre-pandemic levels. That has stressed the EBITDA generation of theaters, that has stressed the profitability of theaters, that has stressed the share prices of theaters, and it's a problem for theaters. Now, I said Windows was not the only problem. There were other issues, including that Hollywood was releasing fewer titles. That appears to be changing. Hollywood is releasing more titles. But as the industry experimented with a whole bunch of variety of options, what the industry coalesced around was that the old 74-day window would become a 45-day window. So that movies would go to the home about 6 or 7 weeks after they hit theaters, not 10 or 11 weeks after they hit theaters. And some movies have gone to the home even quicker, 30 days and 17 days. In our view, 17 days and 30 days are too short. And we would like to convince all the major studios that they should keep movies in theaters longer. And this is a conversation that is front and center live. I was in the office of the CEO of one of the major 5 studios just 2 weeks ago, and he told me how important it was to reestablish the 45-day window as being sacrosanct. I was with the president of distribution of another major studio, one of the very largest, one of the most important, who was bragging to me that whereas other studios were keeping their movies in theaters only 45 days before going to the home, that studio was taking their big movies to the home only 60 days after the movies were released theatrically. So these conversations are live right now between theater chains and studios. We believe that theater chains would generate more money if windows were longer, but we also believe that studios would generate more money if windows were longer. Why? Because they would gross more in theaters, and the more successful the run in theaters, the more successful a run they're going to have when they finally take movies to the home. So watch this space. We'll continue to see what we can do to convince the industry that it should be firm around this 45-day number. And once we get there, maybe we can extend it to 60 days or 74 days like it was pre-pandemic. We will all learn together, but this is a very live industry debate topic right now.
Thanks, Adam. And I think we've got time just for one more question here, which is very related to what you were just talking about. When you think about the box office, how are you thinking about when the industry might reach more of a steady state level and return closer to pre-pandemic type of levels?
So, take you all back in time. Prior to the pandemic, for 5 years in a row, the industry box office was between $11 and $12 billion. This is the so-called domestic industry box office. This is all theaters, all movie theater companies, all chains, all locations in the United States and Canada, the basic measure of our industry. For 5 years in a row, it's been $11 and $12 billion. For 11 years in a row, it was between $10 and $12 billion. COVID comes, it's $2 billion. That was 2020. Then in 2021, it was $4.5 billion. Then in 2022, it was $7.5 billion. Then in 2023, if you exclude the Taylor Swift and Beyonce movies, which we sort of created out of thin air at the last second, which were not expected, did not come from a studio and were not expected to be movies in theaters, the industry box office was like $8.7 or $8.8 billion in 2023. And it was $8.75 billion in 2024. So the box office was flat. It had been high for a decade, went to next to nothing with COVID. It started rising again. It flattened out in 23 and 24. Why did it flatten out in 24? Because of 5 months of actors and writers strikes that crippled production of movies and decreased the number of film releases in the first 5 months of 2024. But that's the past. Let's look at the future. I said in my prepared remarks, we think the number of wide release films is going to increase in 25 over 2024. We have studiously looked at this movie theater slate of the titles that are coming out. And it's one blockbuster film after another blockbuster film, after another blockbuster film, after another blockbuster film. we really do believe, and as I said, nobody's crystal ball is perfect, but we really do believe that the box office will be, in 2025, will be somewhere between $500 million and $1 billion more in 2025 than it was in 24. And we looked at the movie slate in 2026, and it also was wonderful. So we think that the box office in 2026 is going to be bigger again than it was in 2025. So honestly, I hope that the movie theater industry box office does not peak and go to a, quote, steady state. What I'm seeing is that the industry box office is actually growing and growing significantly. It's going to grow big in 25 over 24, we hope. It's only February. We'll all find out by the end of the year. But we're pretty sure that the box office will be a lot bigger in 25 than it is in 24, a lot bigger in 26 and 25. I would hope that it's bigger in 27 than it is still in 26. Success breeds success. The more movie-going there is, the more profitable movies are. The more profitable movies are, the more that studios will want to make more movies. The more movies that studios make, the bigger the box office becomes. So there you go. That's a circular loop on the road to recovery.
And I think that's all the questions we have time for today.
So everybody, thank you very much. We had a very good quarter. The year, 2024, was very good if you only look at the second 6 months of the year. But the second 6 months of the year looks to us to be a harbinger of what's coming in 25 and again in 2026. So I have one simple request. I don't know what you're doing this weekend, but why don't you go to a movie theater and go catch a movie? And when you do, we'd be happy to welcome you at AMC. Or if you're in Europe, Odeon. Or if you're in the Middle East, AMC Cinemas. Thank you, everybody, for listening. Thank you for joining us today.
Wow.
Thank you. That does conclude today's teleconference and webcast. You may disconnect your line at this time and have a wonderful day. We thank you for your participation today.
That was that, my friends. I thought that was fantastic. Let me hear what you guys got to say in the comments. I noticed some people out there being extremely negative and telling lies. Those people were muted. You got a timeout. You can rejoin the channel tomorrow at any time. But no, if you were telling false news, some of the mods did mute some people out there. You were spreading fake news. But again, Adam Aaron said very clearly, prior to the pandemic, the domestic box office was doing 11 to 12 billion for 5 years in a row. COVID hit, went down to 2 billion. 2021 went up to 4.5 billion. 2022, 7.5. 23, 8.8 billion. And last year, it did 8.75 billion, down only due to the 5-month-long writer strike and Hollywood strike. In 2025, we really do believe the box office will be between $500 and $1 billion more than it was last year. Now, I got to go, my friends. I wish you peace and wealth. Have a great day. Check out Lit Exchange. Do yourself a favor. Think about investing in the company. Let's go. AMC for the win.